Today we're going to be talking about Target stock. Target is one of my favorite retailers and its stock is down 47% from its all-time high, which I think could be a buying opportunity for long-term investors with a time horizon of 5 years or longer. In this video, I'm first going to give a high-level overview of Target. Second, I'm going to go over my bull case for the stock. Third, I'm going to go over my bear case. And finally, I'm going to go over my game plan for investing in Target. All this right after. I am not a financial advisor. This video is for entertainment purposes only. Learn to invest like a wolf at your own risk. What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen and I'm the founder of Wolves of Investing. If you're new, I talk about stocks, SPACs, Bitcoin, and anything on my mind related to investing. If you want to learn how to achieve financial freedom through investing, be sure to click on the subscribe button and notification bell if you haven't yet. And please remember to drop a like on this video if you enjoy it, as it truly helps out the channel. So without further ado, let's get right into it. Target is one of the largest discount retailers in the United States, with 1,926 stores at the end of 2021 and a plan to open around 30 new stores per year. It's located in all 50 of the United States, and its locations are within about 10 miles from most doorsteps in America. Its total sales in 2021 was $106 billion, with net earnings of $6.9 billion and diluted earnings per share of $14.10. However, clearly 2021 was an exceptional year, as its average earnings per share from 2017 to 2020 was only $6.44. Target's main categories are beauty and household essentials, food and beverage, home furnishings and decor, hard lines, and apparel and accessories. Target offers its guests in-store shopping, buy online, pickup in-store or curbside pickup that's usually ready within 2 hours, and same-day shipping with Shipt, which is a company that Target acquired in 2017. My personal favorite is curbside pickup, which Target is expanding to offer curbside pickup of Starbucks beverages as well as curbside returns. Those features haven't hit my Target yet, but I'm definitely looking forward to them. Target IPO'd 53 years ago in 1969. Over that time, its stock has outperformed the S&P 500 by around 14,000% before dividends. This includes the 1970s, which was the highest inflationary period in the United States in the last 50 years. It also includes the dot-com bubble, the Great Recession, and most recently, the global pandemic. Target is also a Dividend Aristocrat and a Dividend King, having raised its dividend every year for over 50 years. But the past few months have been painful for Target. As I mentioned earlier, its stock is currently down 47% from its all-time high. So why did the stock tank? Target, like other retailers, overestimated the demand from its guests and reported a massive oversupply of inventory that it now needs to quickly unwind. And investors are also in fear of the bullwhip effect, in which small changes in demand at the retail end of the supply chain can cause massive ripple effects at the manufacturing end. This is particularly concerning in an already strained global supply chain. With all that in mind, what is my bull case for the stock? As I mentioned earlier, Target had record earnings per share of $14.10 in 2021. And now with the inventory issue, it looks like there could be earnings compression for the foreseeable future. If Target can get past this inventory issue and other supply chain related issues in the next 2 or 3 years, I think that its earnings per share will again reach new highs. In 5 years, in my bull case, I estimate that its EPS will reach at least $15 per share. If that happens, I estimate that the market will give it a price to earnings ratio of around 20, which would be a stock price of around $300 per share. Target stock closed on Friday at $142.38. So that would be a stock price return of around 111% before dividends, and a compound annual growth rate, or CAGR, of 16%. Couple that with the current dividend rate of 3%, and that would be a CAGR of 19% for a total after dividend return of around 139% in 5 years in my bull case. So what is my bear case? We are clearly in a very tough environment for retail stocks. With the supply chain issues and the bullwhip effect, there may be 2 or 3 more years of supply chain hell. Even though Target has overcome many obstacles in its 50-year history, maybe this is the final straw that breaks the camel's back. If it is, we could see earnings compression and multiple compression for a lot longer. In that scenario, I think we could see Target's earnings per share hovering around $10 and its PE ratio hovering around 10 to 15 for a stock price of around $100 to $150 in 5 years, which clearly would be a pretty bad return, even if it continues to pay dividends of above 3%. So what is my game plan? I'm leaning more towards my bull case than my bear case for Target. And I recently started a position when it dropped below $150 per share. Because Target IPO'd in 1969 and managed well through the 1970s massive inflationary period, I think that Target is an inflation-resistant company. Clearly, it's not an apples to apples comparison, since Target was a much smaller company back then and probably only had around 100 stores at the time. But it has managed to beat the S&P 500 over the past 50 plus years, which includes that 1970s high inflationary period and even the lesser 1990s inflationary period. I also believe that under its current leadership, Target is Amazon resistant. I think that CEO Brian Cornell architected Target's success since he joined in 2014. And one of the best things that happened under his leadership was hiring Arthur Valdez as its Chief Supply Chain and Logistics Officer. Valdez had former senior leadership positions at Walmart and Amazon. And I believe that he's responsible for turning around Target's online capabilities to compete with Amazon. Also, I think that Target's dividend is relatively safe, with this 50-plus year track record of raising its dividend and a relatively low dividend payout ratio when compared with its earnings per share. Target just raised its annualized dividend to $4.32. Even if its earnings get compressed to $8 per share, that would still give it enough wiggle room to keep paying its dividend. So while I wait for Target to turn around, I still get to collect a nice little dividend payment. And also, based on historical data available on macro trends, 3% is relatively high compared to Target's historical dividend range. So for now, I plan to keep dollar cost averaging as long as the stock remains below $150 per share. I realize that we're potentially in a very treacherous market. The S&P 500 is still in a bear market, down 21%. And if it gets really bad, I wouldn't be surprised to see Target approach its March 2020 lows. If it does get around $100 per share, assuming my bull case is still intact, I would consider backing up the truck into a full or near full position. All right, so thank you for making it to the end of my video. Let me know what you think about Target stock as a long-term investment. Drop me a line in the comments. Be sure to leave a like on this video before leaving. Thanks for watching, and I will see you next time.